Can a trade really happen in just 5 seconds? Let's test a simple setup and see how it works. Financial markets can offer opportunities, but they also involve risk. Many beginners start trading without understanding how strategies and timing actually work. In this video, I'm going to show you a simple 5-second trading setup for educational purposes. The goal is to understand how short-term market movement can be analyzed using basic indicators. Remember, trading always carries the risk of losing capital, and results can vary. This video is for educational purposes only. Now, let's look at the setup used in this example. On the chart, I'm using 2 simple indicators to understand short-term market direction. The candle time frame on the chart is set to 5 seconds, which allows us to observe very small price movements in the market. For this example, the trade expiration time is also set to 5 seconds, meaning the trade will close just a few seconds after the entry. This setup helps demonstrate how traders sometimes analyze quick market momentum in short time frames. So, the entire setup is now ready. Based on this setup, we'll observe the market movement and place a few entries when the conditions align with the strategy. The goal is to see how the setup performs in real-time market conditions. As you can see here, I placed a sell entry based on the setup we discussed earlier. Right after the entry, the market started moving downward, and the candle dropped strongly in the same direction. Because the movement aligned with our setup, the trade quickly moved into profit. Within just a few seconds, the price stayed below our entry point, and the trade closed successfully. This example shows how short-term momentum in the market can sometimes follow the direction indicated by the setup. However, it's important to remember that market conditions can change at any time, so proper observation and discipline are always important while trading. Here you can see the second entry. According to the setup, the price started showing upward momentum near the moving averages. When the candle confirmed the upward movement, I placed a buy entry. Right after the entry, the market moved upward strongly, and the candle pushed higher. Because the price stayed above the entry point during the 5-second expiration, the trade closed successfully. This example shows how following the setup and waiting for candle confirmation can help identify short-term market movement. Now, let's look at the next entry. Here, you can see that the market had already moved upward for some time and then started showing signs of a reversal near the moving averages. The candles began to turn red, and the price started moving below the indicator lines. When the downward movement became clear and the candle confirmed the direction, I placed a sell entry. Right after the entry, the market continued to move down strongly. The candle dropped further and stayed below the entry point during the 5-second expiration time. Because the price remained below the entry level until the trade closed, this entry also finished successfully. Before moving on to the next entry, I have something for those who want to learn and observe more trading examples. From Monday to Friday, I share free trading signals where you can watch how different setups are analyzed in the market. These signals are mainly for educational purposes, so you can understand how trades are identified in real market conditions. It's a simple way to observe market behavior and improve your understanding step by step. Now let's look at another example. Here, I placed a buy entry because the market started showing an upward movement near the moving averages and the candle was pushing up. Based on the setup, it looked like the price might continue moving upward. However, the market doesn't always move as expected. After the entry, the price quickly reversed and the candle moved slightly downward before the expiration time. Because the price closed below our entry point, this trade ended in a loss. This is a normal part of trading. Not every trade will be successful, which is why risk management and patience are very important when trading in the market. Now, here you can see another entry. In this trade, the expiration time was mistakenly set to 1 minute, whereas it's typically a 5-second setup. Even though the timing is different, the entry was made based on the same market direction. Right after the sell entry was made, the market suddenly moved upwards instead of downwards. For a moment, it looked like the trade might go against us. However, as the expiration time approached, the market started moving downwards again. Just before the trade closed, the candle fell below the entry level. And as the expiration time ended here, my entry was successful because the price was below the entry point. Now let's look at this entry. Here the market is coming from a strong downward trend. After the drop, the candles start forming small bullish movements near the moving averages, which shows that the market is trying to move upward. As the price starts pushing above the moving averages and the candle shows upward momentum, a buy entry is placed. Right after the entry, the market continues moving upward and the candle stays above the entry level. When the 5-second expiration finishes, the price is still above the entry point and the trade closes successfully. This example shows how a small reversal after a strong downward move can sometimes create a quick upward opportunity. Here you can see another quick entry. The market shows a small downward movement near the moving averages, and the candles start pushing slightly lower. Based on this signal, a sell entry is placed. After the entry, the price continues moving downward and stays below the entry level. When the 5-second expiration finishes, the price is still below the entry point, and the trade closes in profit. So this is how the entire session goes today. In this session, you see how the setup works in real market conditions. Some trades move exactly as expected, some take a little time, and sometimes the market even moves in the opposite direction for a moment before following the setup. The most important thing is to stay patient, follow the setup carefully, and manage risk while trading. If you want to watch more live examples and learn how these setups are used in real-time market conditions, you can follow the channel for more educational trading content. Thanks for watching, and I'll see you in the next session.